Hello traders, Cousin Vinny coming to you from theclosingprint.com on January the 5th, 2020. In this edition of your weekend video newsletter, we'll discuss all of the indices which have pulled back to more of a neutral stance at the present time. The Hang Seng was higher. We're looking for the Shanghai and the Hang Seng to continue to moving higher, breaking out of a inverted head and shoulders pattern on the weekly time frame, something you might want to check out if you're trading any of the Chinese stocks, as we started positions last week. The FANG stocks were mixed for the most part. Tesla had the best performance. Bond stock ratio and HYG junk are bullish, extended, and should be viewed as somewhat neutral, possibly a little pullback to the 20-day and still remaining bullish for the equity market as bond yields pull in a little bit. We have the Dow Composite bullish to neutral at the 21-day moving average, a little pullback there as well. S&P 1500 is bullish, and the XII ARCA Institutional Index has been trending between standard deviation 1 and standard deviation 2. This index tells us what institutions are doing with their core portfolios. Tick and Tick Q, we saw what looks like a neutral to sideways pattern. What I'm thinking that is rotation. NIMO and NAMO are still in a bullish cycle, so breadth is continuing to unfold and continues to look bullish. NYHL is in a bullish cycle, and the NYED advanced decline is above the red zone, but it did look like it peaked last week. Put call ratio is neutral to slightly bearish. It's at a lower range. And VIX is expanding its range, closing at 1402 on Friday. We popped up above 16, so that's showing on the Iran geopolitical news that there is some fear out there. But we don't have skew telling us that institutions are that concerned because we're not above 135. That would be a level where we would be looking for more hedging going into some of the best months of the year, January, February, March. US dollar did pull back a little bit. It's in a descending pattern. 50, 200-day cross is coming. That's something to keep an eye on if you're trading commodities. Gold did break out of that descending channel a couple of weeks ago and now is moving higher. It's trending. Copper is bullish as well, fading midweek, so we need to keep an eye on copper. That will affect the housing market, construction, and also building products groups. West Texas crude and Brent both moved higher, achieving our targets that we were looking for over the last few weeks. 10 weeks above the 20-period moving average on the weekly time frame. We saw the S&P 500 sectors fading a bit, but keep in mind that all the sectors are above their 20 and 50-day moving averages. Some of them are a bit extended, could pull back a little bit. We'll look at some IBD 50 names that show strength. Note there's a smaller list this week. Some stocks showing relative strength. We have Bukowski with 505 green with the CPI signal half red since the 3rd of January. At 20%, that's bearish with 16 bearish patterns, 4 bullish patterns, and 230 patterns waiting for breakout. Bottom line is we could see a little bit more volatility in the markets, but institutions don't appear to be hedging at the present time. If you've been a member for any length of time, you know that I've been paying attention to ARCA Institutional Index XII more recently, and that's due to the fact that we're trading at all-time highs, and I'm very suspect of a pullback in the short term. And what I'm looking for are red sticks showing up and closes inside of standard deviation 1, the darker area. While closes inside of standard deviation 1 aren't a end-all for the markets, a red stick, and especially 2 red sticks, would tell me to be more cautious and to start taking some profits and to start selling. So at the present time, these 75 stocks most commonly held in institutions' core portfolios is telling me to be open to a continuation. There's always a possibility of a 2 to 5% pullback in a bullish market and still be in a trend that could last into 2020. So rather than watching the financial news, all you need to do is check out what institutions are doing, and that'll tell you what you should be doing as well. If we look at the S&P 1500 composite of the S&P 500, S&P Midcap 400, S&P Small Cap 600, this gives us a broad measurement of market participation and breadth. We can see that we have a green signal, we're bullish, and histogram is confirming. Again, with the Elder Impulse system, we have no red sticks yet. There is a possibility of a pullback to the 21-day, the red line, in the short term and still be in a bullish trend, or a test of this previous breakout zone or pivot zone where we broke higher in the second week of December. For now, this chart is bullish. And if we break down these three groups, the S&P 500 advanced decline line, cumulative basis, S&P Midcap 400 cumulative advanced decline, and the S&P Small Cap 600 advanced decline percent, this measurement of advancing stocks over declining stocks continues to rise. Therefore, we are still very bullish. We're not in a descending pattern, lower lows and lower highs. We're making higher highs and higher lows. It won't be a straight shot, but this is a confirmation of sorts that we keep an eye on, in addition to the S&P 1500 that we just looked at. We also see the NYMO, McClellan oscillator for the New York Stock Exchange, over 3,100 stocks trading on that exchange. There is some skew effect on this particular index because there are ADRs, a lot of preferred stocks and mutual funds that are also traded on the New York Stock Exchange. That said, however, we do have a bullish cycle continues to unfold. I'd be more concerned if this had turned over and was starting to descend, as we saw back here in late November, early December. Whereas now we're continuing this uptrend, and most likely as we consolidate in this sideways pattern of blue and green elder sticks, unless some catalyst emerges, this trend continues to point to further upside before becoming overbought, as these NYMO values of 41.75 isn't that elevated at present. Once we get up into the 60 zone, we can start to look at this as overbought and extended. The NASDAQ weekly continues to forge a path higher after this reversal candle in the first week of October. RSI is showing muscle. This is just telling you that we have a very strong trend at the present time. We did see a doji spinning top last week, while price action continues to move higher on above average volume and MACD's above its signal line. We can also compare the NASDAQ McClellan oscillator in the same respect, because we did think that this peak that eventually turned into a valley and moved higher last week was starting to forecast a potential pullback in the NASDAQ and the growth stocks therein. Such is not the case at the present time. Again, here we're not overbought at 26.79 or at 38. Once we get back up into the 60s and 70s, then we can think of this as being overbought. Presently, this is more bullish for the NASDAQ than bearish, unless this peaks and starts to move lower very rapidly. One thing we pointed out over the last couple of weeks was the doji spinning top we saw 2 weeks ago with the high at 167.12. RSI was near 70, and we had the possibility of either moving sideways and consolidating the recent gains off of the October lows by pulling back in price, or by moving sideways in time, leading to a follow-through and a test of 170 in the short term. So if IWM were to start to move lower rapidly, that would be one indication that would tell us to take some risk off of our position and to sell some stocks into strength, as we view the IWM as a risk on, risk off indicator. If we take a look at the New York Stock Exchange, with over 3,100 stocks, a broad measure of market participation, and we just take a simple calculation of new highs versus new lows, we can see that we spent most of 2019 above the zero line. With the moving average climbing, this chart would tell us to be more bullish than bearish, as there are more new highs than new lows. Even though we did see a red stick on Friday, that's just telling you that we haven't exceeded what we saw on Thursday. If you remember Thursday, just about every stock closed at highs, and most of the people in the trading room showed all of the different positions that people were in, giving you a good barometer of market strength, because it seemed like everybody was doing well on Thursday. And somehow this is all supposed to change overnight because of a geopolitical issue. Rather than subscribe to that extreme scenario, I want to look at several indicators that tell me whether or not institutions are concerned. We already looked at XII, the ARCA Institutional Index. You'll remember we're looking for red elder sticks. We don't have that yet, just blue and green. In addition, the New York Stock Exchange advanced decline, while it does have a bit of a skew to it versus the S&P 1500 that we just discussed, we are above the red zone, even though we did peak on Friday. So I would be more concerned if we were inside the red area like we've been previously when we saw pullbacks. So any pullback into the red zone would need to close 2 days in a row for us to get more concerned. And we would need to see more evidence that institutions are hedging their portfolios. We can see that with skew. If you have a stock charts account, $ skew above 135 would tell you that institutions are actively hedging. We did see a little bit of that at all-time highs going into the end of the year. We've since dropped back below 134. Previously, back in 2018, prior to the drop that we saw in October, when the Fed got overly hawkish, leading to that December low, this indicator gave us a good idea of what institutions were actually doing. Right now, they don't seem to be that concerned, so we'll follow their lead for right now. With the markets clearly trending, no blue or red elder sticks on the S&P 500 Spider ETF, and we have fairly low values on VIX. So that tells you that puts are actually somewhat cheap by comparison. In addition, if you look at VIX for the front month and VXV for the 3-month, you can see looking out 3 months that institutions don't seem to be that concerned as we stay in the white area. This tends to be neutral. While we look for dips into the red zone, we look for pullbacks and bounces. Pops into the green zone, we look for bottoms and rallies. So at the present time, we are neutral on VIX VXV. Here is the bond stock ratio. In the upper panel is the S&P 500 weekly chart. Again, no red sticks. We are a bit elevated above the 50-period moving average. The 9 and 20 obviously are also bullish, not shown. More importantly, at the bottom panel is the ratio between the UST 10-year bond and the S&P 500, the so-called bond stock ratio. If we're bullish equities, we want to see the moving average, the 65 period, dropping, and we want to see the ratio, the red line, continuing to move lower. So as this moves lower, this is telling you that equities are favored over bonds. We do look for peaks and valleys. There is potential for this to turn back up. You can see the moving average is flat to slightly lower over the last few weeks, November and December. So we would like to see this continue to turn like it did back in 2016 into 2017, going into the election this year. So we'll look for that over the next few weeks and months. While we presently have a bullish signal on junk bonds, junk and HYG, high yield corporate debt, tend to lead the markets, whether we're moving higher or lower. We're presently trending. Every once in a while we move up to the upper Bollinger Band, then pull back to the 20-period moving average, as you can see. So there is potential for us to pull back a bit as RSI is a bit overbought. There's also the possibility that we can move sideways like we did here rather than pull back to the 20-period moving average. However, one thing we'll always keep an eye on is the potential for bonds to sell off. If we did see a sell-off back below the 20-period moving average, that would be a sell signal telling us to get out of the way like we saw back in September through December. When the markets pull back, junk bonds tend to lead as well as high yield corporate debt. So no signal at the present time. This is bullish, not bearish. That said, we do have the AGG, Barclays Aggregate Bond Fund, which we have a position in. Having rallied since last October, November, 12 months, started consolidating, and lately we were anticipating that we could see this rebalancing turn into distribution and markdown, and was quite surprised recently to see this relative strength hold up. Now, with the geopolitical news coming out, it appears that institutions are buying bonds. They're not hedging their portfolios with puts. They're taking bonds instead. They're also buying gold. So at the present time, it looks like bonds are in favor in the short term. We also want to keep an eye on TLT, which I do not have a position in. That is still in a descending pattern, even though it did have a pretty bullish week. RSI is turning at 50, and MACD looks like it could start to turn in the short term. So there's always a possibility we could test 141.50 and the descending trend line overhead. A breakout of that trend line would come if institutions apparently need more protection and choose to do it with bonds. The other mixed signal, of course, that we've been seeing lately is that the US dollar has pulled back. So this is in a descending pattern. We do have the 50-period moving average about to cross through the magenta colored line, the 200-period moving average. That bearish cross could spell a move back down to these June, July lows. With a bearish US dollar, the gold trade continues to unfold. As we pointed out several weeks ago, this descending pattern will most likely accelerate, that we were spending a lot of time above the 21-day and at this descending trend line, that if we broke above this volume by price band, that we could accelerate. We've done that. We're testing the highs now, and RSI is showing muscle. Volume increased as well. MACD shows that bullish momentum continues, and that we'll most likely see a follow-through if the US dollar continues to move lower. West Texas crude also rallied for the 10th straight week above the 20-period moving average. You can tell the bond, you can see that Bollinger Bands are opening top and bottom. That's telling you to look for acceleration in the move. Presently, this looks pretty bullish for equities as we have a positive correlation with crude oil. We also want to keep an eye on copper. You can see this volume by price area. If we do move above that zone, we could be testing these highs that we saw back in early 2018. This would be bullish for construction, building products, and home builders to stay bullish those sectors. Sectors started to fade a bit last week. Do remember that all of the sectors are above their bullish 20 and 50-day moving averages. So a little bit of a fade makes sense. We did have more strength in real estate technology last week. Look for that to continue. And we also have the international markets pulling back a bit, but not looking too bad, with potential in Singapore, China, and the Shanghai index. As Martin Pring had pointed out in his weekend blog post, the Shanghai and the Hang Seng show lots of potential. So if you're trading any of the Chinese stocks, JD.com, Alibaba, Baidu, Beta, Bilibili, VipShops Holdings, IQ, and others, look for those to follow through. As we saw this inverted head and shoulders pattern, breaking up this neckline with potential follow through, the depth of the head and shoulders pattern projected on top of this breakout gives us a pretty good idea of what to look forward to in the Chinese stocks in the weeks ahead. While the individual spider sectors, as I previously mentioned, are above the 20 and 50-day moving averages, with the exception of materials, which pull back, and XLP. Generally speaking, the sectors look pretty strong, with XLK and real estate showing the most strength. Here are the IBD 50 stocks for the week. Do note in the opening monologue there are a lot fewer stocks that are showing potential for follow-through on the bounce, like Air Lease we saw last week did bounce, move back above the 20-period moving average. RSI is turning up. Looking for a follow-through on Monday, Tuesday. MACD will turn as a function of price. We'd like to see volume surpass what we saw on Thursday, and for a bullish candle to point to a retest of recent highs. We're also watching how this recent price action in Alibaba plays out. We just talked about the Hang Seng and the Shanghai. How these trade this week would be very interesting. I'm looking for a follow-through bounce, maybe a test of the 9 EMA. RSI is showing muscle and volumes increasing. ACGL, Arch Capital, also from previous watch lists, a little bit extended from the 9 EMA and 21 day since its last trip there. Followed through, RSI is rising. Watching how this price action plays out this week as well. Boot Barn continues its bullish trend, breaking above this previous pivot, 52-week highs. RSI is pointing higher, suggesting that this follow-through will continue. Volume increasing and MACD's above its signal line and rising. Booz, Allen Hamilton from previous watch lists moved back above the 9 and 21 day moving averages. Nice bullish candle on Friday. When we saw some relative weakness, this one showed relative strength. RSI is rising. Look for a follow-through day, Monday and Tuesday. A test of the 74.50 pivot zone. Once we get above that level, we could see 77.72 in the short term. Depth of pattern on top of this would give you approximately a $10 move, or 87 ultimately. And the months ahead, if Booz Allen continues to push higher. RSI suggests it will continue higher, and volume is increasing. MACD above its signal line and rising. CB Richard Ellis, CBRE, might follow through. We did note strength in real estate, so watch for this one to bounce as well. Another example, Chegg, which has been on the watch list in the past. This one has just been moving sideways since late November. Hasn't been able to break out. This is a purveyor of electronic and printed textbooks for college and grade level schools. Looking for a bounce and a breakout in the short term, but because RSI continues to trend lower, we're less interested in some of these IBD 50 stocks, showing little interest by institutions at the present time. Chipotle from a recent watch list continues to push higher, following through over the last couple of days, looking for a breakout. RSI is rising, volume increasing, and MACD above its signal line. Copart trending, buyers stepping up on Friday at the 9 EMA, closed higher in the upper half of its daily range, looking for a breakout this week. As volume was above average on Thursday, pulled back on Friday. D.R. Horton, we're looking for copper to continue to move higher to give us an idea, with interest rates moving lower, that these builders will continue to push off of these support levels and get back above the 21 day. RSI is rising, suggesting that we might see that test this week. EPRT, remember real estate was doing fairly well last week. Nice bullish engulfing candle on Friday. Consolidation along the 21 day for the last month. Breaking higher, most likely will follow through. RSI suggesting higher prices as EPRT, Essential Properties REIT, looks to be ready to return back up to 52-week highs. Watch the volume, MACD's crossed, and standard deviation has turned back up. Euronet Services, EEFT, RSI has been moving sideways at the 9 and 21 day moving average. Look for a pop. this week. Flagstar Bank Corp, we reviewed this one last week as well, FBC, back above the 21-day. The banks pulled back a little bit, but look pretty strong going into this week. So let's see if we can't have a better first half in the banks. JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, and some of the other regional banks all look ready to resume their trends higher this week. FTNT, I know some of you, including Susie, were trading this one. Came down to the 21-day, followed through on Thursday and Friday. It looks like this is going to break out and continue trending. It has potential to run. RSI showing muscle again, and MACD's turning, volume increasing. So look for higher prices. Standard deviation is rising, telling you that we could see at least a move up to the 2 zone on standard deviation, or another 2 or 3 days of upside on FTNT, Fortinet. Health Equity, HQY, remember the healthcare sector, XLV, did pull back to the 21-day moving average last week. We're looking for a bounce. If that does happen, a lot of these stocks in the healthcare group could bounce and follow through. RSI would turn back up as a function of price, so would MACD. Watch for volume. Maybe the healthcare sector can get a bounce this week. JP Morgan, as just previously mentioned, pulling back to the 90 MA, possibly to the 21-day. In a nice bullish trend, we'll look for buyers to step up if that happens this week. Leidos Holdings, bullish engulfing candle at highs. RSI is showing muscle. Strong trend, MACD above its signal line, and volume increasing. Lululemon, some of you traded this one last week as well. Nice bullish trend. Every once in a while it does pull back below the 21-day. Buyers step up. As long as that continues, look for this to continue trading higher. RSI is rising but dipped a little bit on Friday. MACD is flat but trying to cross over. Watching volume. If the retail sector XRT gets some strength and XLY consumer discretionary, we could see these retail stocks continue higher. Microsoft looking for the trend to continue, but we do see a little bit of weakness in RSI, which could spell a pullback to the 21-day. If that were to happen, I'd be looking for the next bullish day, not the day that it closes at the 21-day, if we do test it, for potential long and add. On the weekly time frame, our measured move is 168 target, so we still have a ways to go to get there. We mentioned Momo last week and the week before. We were looking for the 200 period moving average to hold. Kind of faked this out here because we did get back above the 200 period and the 21-day on Thursday on a big move in Chinese stocks, which most likely will continue higher. This is another name that we'd like to trade. RSI would need to continue higher as a function of price, and a push off the 21-day on Monday, a test of this pivot here, could lead to the 40 level in the short term. PACOM is also looking good, like it might follow through and test this 280 level in the short term. RSI suggests we could see higher prices. Volume increasing, MACD's turning. We could get a crossover and a breakout above this level here at 270 and get a move above this 280 level in the short term. Depth of pattern is about 20 points on top of this, so maybe 305, 310 as price remains above the bullish 90 MA. Planet Fitness, we're also watching for this to start to accelerate as people get ready for the spring and summer. Probably many people receiving memberships for their Christmas presents as well. Looking for a follow through here and a breakout above this level at 75.97. We tested it on Friday. A breakout here, RSI suggests we could see a quick acceleration, and ATR has plenty of room to the upside. MACD's turning, and we have volume increasing. I like Planet Fitness. When this one starts to trend, we can get a nice return and gain for our money. TTC, Toro, we're looking for this to follow through from previous watch lists. Pushing off the 21-day, nice bullish candle, relative strength on Friday. Plenty of room to run for at least a week or more in RSI as it continues to rise above 50. Look for a break above this pivot. volume increasing, MACD crossing, suggesting that we're going to see higher prices in the short term. Buyers at the low of the day, you can see there, Thursday and Friday, defended the 9 EMA, so that's your stop just below the 9 EMA. Look for a breakout above 81.55. Some stocks that we're also watching, like Uber, looking for that to follow through, breaking above some of these pivots, testing this recent high back in October. It looks like going to be the case. Could be an inverted head and shoulders playing out in the short term with a neckline back here around 35. We also, many of the Chinese stocks look good. JD.com, nice follow through on Thursday and Friday on above average volume. Relative strength line climbing. Annual sales and earnings looking good going forward. Decent IBD numbers as well, and a growth rate of 100%. Solar Edge also showing relative strength last week on Thursday and Friday. I know many of you are trading this one as well. Add 20% on top of this, or 20 points, for a target of 120 over the weeks ahead. We also have a few stocks to look at in the relative strength blue dot scan. Some of these show up again. Ballard Power Systems following through. Fairly inexpensive name. RS line numbers of 98. Price action breaking out last week on above average volume with earnings out in March. That's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on January the 5th, 2019. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Okay, I hope this helps. Take care, and we'll talk to you soon.